This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Tuesday. Welcome back to another episode of Benzinga Live, and we've got a packed show today. I've got my man Kunal from Bulls on Wall Street hanging out backstage. We're going to bring Kunal on in a minute or two. An old friend of Benzinga, excited about that. And then in about 20 minutes or so, we're going to bring on Matt Scholes from LendingTree to talk about some credit spending, credit and debit, what's going on in the country. A lot of people have been talking about the, basically record-breaking credit spending that Americans are using right now, how much their credit they're carrying on their credit card bills and whatnot. So all these things we'll discuss with Matt Scholes here in a little bit. I'm going to pop up my Benzinga Pro real quick. Let's just do a quick check-in on the overall markets before we bring Kunal on. S&P 500 trading down a little bit more than 0.1%. Pretty flat. You can see it hanging out right at that 400 level. Qs, pretty much the same. Your Dow Industrial Average in the green, albeit very slightly. Your top headlines of the day, of course, Microsoft getting ready to report this afternoon. Pretty flat today, down just about 0.09%. Tesla getting ready to report tomorrow, trading up. I mean, Tesla's just been incredibly strong the past couple of weeks, coming from about 105 up to 144. So all these things we're watching. If you guys have stocks, trades, whatever, always let me know in the chat. New trader in the chat's asking, what time does Microsoft report earnings? So Microsoft, the numbers will come out right after the close, probably like 4:05 p.m. I would say within the first 5 minutes typically. Conference call itself is scheduled at 5:30, so you'll see the stock get an initial reaction to the numbers that come out right at the close or at 4:05 or whatever it is, and then again the stock might move at 5:30 during the call if Nutella or any executives give any big announcements. But again, I mean that and this is all Eastern time, by the way, 4 and 5:30 p.m. Eastern. But alrighty, y'all. It's 11:34 a.m. It's time to bring on our first guest of the day, Kunal from Bulls on Wall Street. Without further ado, let's give Kunal a very special Zinger Nation welcome and talk to him when we come back. What up, Kunal? How you doing today?
Yo, what's going on with you?
Not a whole lot. We're just watching these markets, doing a little trades. What have you been watching? What have you been trading?
So right now, with the market kind of showing a little bit of a bottoming, I've been really focusing mostly on really beating down tech names that got a decent amount of short interest. Usually, when you have this kind of run in the market, you really want to go for kind of that dash for trash. So, you're really thinking about all right, what are the tech stocks that really led the way down? So you'd be starting in say November 2021, right? You're talking about your UPSTs, your Affirms, even stuff like Tesla's, right? Really been maraudered this past, 6 months. Those are the names that you really want to shoot for. There are some really good relative strength names out there like Solars and Netflix, but I usually want to start with the cream of the crop and then start working my way up as the market starts to mature and the trend starts to really get steady.
Yeah, and something you mentioned there is that a lot of these kind of growth, growthy tech stocks, I don't know what you want to call them, a lot of people, whatever you want to call them. Like you said, a lot of them topped out, Tesla included. I've got Tesla's chart pulled up here, topped out in November, which is interesting because if you look at the actual market, if you look at the SPY, that didn't top out till January. So if you look at, you mentioned Upstart, Roku, Affirm, any of these names, a lot of them topped out when growth, November 2021, not January. And similarly, I think Bitcoin topped out in November at that point as well. Let's see, let's go back in. Yeah, Bitcoin topped out in November, never got back to its highs in January. So these names that topped out in November and not January back there, I mean, they've been kind of outperforming. I mean, I saw like Shopify has been up over 100% the past few months. What would be a sign to you that that strength is starting to kind of go to other places?
So what we really want to do is like, while these things have a bid, like you do want to kind of focus in on them as they're going because they're going to still give you the biggest percentage upside as they've been beaten down, obviously the most. But at some point, like as those things get extended and we're getting into earnings season now, this earnings season will kind of give us a tell on whatever the new market leaders are, right? So we want to start looking and thinking like, okay, what are names that are having really, really positive reactions to earnings? So like right now, like I've been trading this Netflix for the last few days, right? So like that was something that was beaten down to, all necks of things. And, they had a pretty decent sized gap on earnings day, but now you're getting subsequent follow through, which is something that we didn't get in the past few earnings seasons. You would have stocks that would have a positive reaction to earnings, maybe for the day, and then the next day it would dump off and the next day dump off, right? And you would just never get any follow through. So what we want to start doing is as this earnings season starts to progress and we're starting to get into the meat of it in the next few weeks, right? We want to see like, all right, does the gap actually hold? Do you get a follow through day, a secondary follow through day? And then really the first tell will be like, when there's an inevitable dip, which there always is, right? Does that get bought up? How does that react? Does the market start to shake off bad news? We may have, manufacturing news or this news or PPI, CPI, whatever it might be. But as we start to shrug those things off, you'll inevitably get like a quick flush anytime there's news out. Like you get the algo pushes up and down, but does that get bought up? And that'll give us a change in character that says that, hey, this market may have some legs. And we're already starting to see like, everybody's talking bear market, bear market, bear market. But, if you look at an industry group of sectors, right, and you start to think like, okay, like what's actually been running. If you start to look at sectors like a 90-day run on sectors, gold is up, gold miners are up 42% the last 90 days. China, the FXI, right, is up 38% the last 90 days. Semiconductors, which tend to always lead the way, up 32% in the last 90 days. So we are starting to already see, right, like this whole realm of sectors that are no longer in a bear market, but are actually in a bull market thrust. And it goes from even Europe, the overall Europe index, VGK, is up 27% the last 90 days, right? Solar is up 22% in the last 90 days. So we're starting to see like a whole broad swath of sectors that are starting to move. Oftentimes, especially in the US, right, we get so focused on just like tech, and then high growth tech, right? And so, our moods are controlled by what happens with Apple and Tesla and so on and so forth. But we're already seeing pockets of green shoots for the last 90 days that are really, really positive. And so there's definitely some good places to hide some money and make some good trades. And I think you're going to start to see a little bit of rotation probably into biotechs. If you look at the IBB, that looks like it's about to bust loose. And so we're getting some good action here, irregardless of, what happens with the general tech index. We're going to start to see some other stuff happening. And you definitely do want to see, the more risky names lead the way. And we've seen that already, right? We're starting to see some decent sized short squeezes on some of these names.
Yeah. And I mean, I shouldn't be surprised, Kanal, that you're coming on sounding pretty bullish. You're coming from bulls on Wall Street. I mean, we're going to get Microsoft's earnings after the close today. You talked about Netflix's earnings, which I think that's what's going to be really important in terms of this earnings cycle. It's not necessarily how the companies report, because let's face it. Look, Microsoft was one of the many big tech companies that announced layoffs this quarter. They'll probably be talking about some troubles, and it might, but I'm curious about the stock's reaction. And if Microsoft gives some, even if it's like decent numbers, but some not so great news, but the stock doesn't get hammered, and then like you said, there's like a follow through, like maybe either some bullish activity or even just not going down a lot. Like I don't know. I'm getting pretty bullish. I don't know if you have a can you talk me out of getting fully bullish right now?
So we already know that the earnings are going to be trash, right? Like everybody's already told us, right? Like
Right.
we know for a majority of stocks, like they don't have to beat on their earnings. We already know that they're going to be trash. Like you have so many names that are like larger tech names or mid cap names that are like $8, $10, $12, $14, right? So on and so forth, that were in the hundreds. And so you already know they're turds. Like that's not the surprise. Like when they come out with their earnings and say like, hey, we're not making crap, we already know that, right? And so it's more about the market's ability to just shrug that off and say like, yeah, we know. All right, cool. Like now what happens next, right? Do we get some follow through? And as long as there's not additional surprises, right? And that's always around the corner. You never know, right? The layoffs is like, okay, I think that's probably a nothing burger. Like companies that have hundreds of thousands of employees, like laying off 2,000 people, 1,000 people, like, okay, that's just part of the game. And especially in this phase of the cycle. But like a lot of the layoff news they've been getting bought up. You know, if you look at Wayfair W, right? They announced they're like laying off 2,000 people a couple days ago. Like the stock shot up 50% because it's got so many damn shorts in it. And you know, all these times like companies are laying people up, a lot of the times the reaction has been positive. So, you know, we look at the headline and say like, oh crap, people are getting fired, but the stocks are reacting in a whole different manner. That's the tell.
Yeah, and I think for, in a bearish environment, we were looking at the opposite happening. I mean, I brought this up the other day on the show, but I remember on the big boys like Apple, Microsoft, at the end of 2021, when the market really started topping out right here, all these companies reported great quarters. And the stocks didn't really like jump after the earnings. Like I think they had like okay, whatever. Like Apple reported its like best quarter ever, and the stock like went up like 0.5% after hours or something. I was just like, what's going on? And so in a bearish environment, you're looking for stocks to either like move down on good news or not go up. And we're seeing the same thing kind of happen now, like you mentioned, Kunal, that you're seeing, stocks really announce like objectively bad news, but then get bought up. And that's where I think right now as a trader or as an investor, we really have to be watching for the market reaction to these earnings reports and to the company news rather than the news itself, because whether or not, Tesla's cutting prices of cars, whatever, like may sound good or bad, but it's going to be more about A, what the market is already priced in, and B, how the market interprets this news for its impact on that company in the future, which for a lot of these companies that are doing layoffs and restructuring, Wayfair as an example, there may be a lot of investors out there that are thinking this is going to be good for the company long term, even if obviously as an investor, hearing that a company you own the stock in is doing layoffs probably isn't the best news that you want to hear.
Yeah, and there's a couple other things too. It's like, you always have to think of like market cycles. And in reality, minus like a handful of like your mega cap companies, we've been in a bear market for 18 months, maybe even longer in some of the smaller cap, mid to cap names. This has been going on for a long time. So if you're thinking about like the length or what we call duration of moves, the bear market action's really been going on for 18 months, close to it, for many names. So no matter what, we're just also in tail ends of cycles. We might not be at the bottom, but we are in the 8th inning, 7th inning, 8th inning. And in reality, like we're really just stuck in a range. Like this is range trading. In range trading, in a nutshell, there will be sectors that lead the way and stocks that lead the way and others that just stagnate. And we could see an environment like that where, hey, like this first quarter of the year, some of these larger names like Apple and stuff, they may just sit around, but we'll start to see other types of trends form because, if you look at a majority of stocks, they've been really sitting around in the same range since summertime. Even the NASDAQ is really at the same price as it was in June. So like, even though we think bear market, we've really been just in a range. It's range trading. And in range trading, there will be pockets of strength and pockets of weakness, and it becomes a stock picker's market, and that's where the skill comes in.
There you go. Well, Kunal from Bulls on Wall Street, we are running in town. We're running out of time. Thank you for coming on the show
I'm
today.
hurt.
Well, we'll get you back on
I'm
soon. I
just
didn't
joking.
realize you
Tell
were such
Jason
a.
I said hi.
I will, but before I let you go, I want one bold prediction for 2023. It can be stock market related, or it can be whatever. You can tell me who you think's gonna win the Super Bowl. I just want one bold
Detroit
prediction.
Lions, baby. We're going all the way, Motor City Dan Campbell.
Next year.
But I do believe, like, at least in the stock market environment, I do think probably a lot of the large caps stagnate a little bit, and we're going to start to see some new leaders emerge in this earnings season. And probably it'll be some of these beaten down names that have a positive reaction to the earnings. And I don't know exactly. We'll have to see which names they are, but I assume it'll be the UPST types of names, like things that are down 80, 90%.
Kind of the Kathy Wood, like you said, the really beaten down, growthy tech names that are down.
You don't need, in this next market, Apple's not going to lead the way, right? Like in this next bull market, whenever it happens, Apple's not going to lead the way. Microsoft's not going to lead the way. There'll be a whole host of new things that lead the way, and it's our job to find those bad boys.
So let's take like Asana for an example. That's one of those upstart Rokus. I mean, Asana was 145 November 2021, 145 bucks a share, trading at less than 15 bucks a share now. Do you, is it just essentially that people view this company as so bad, so beaten down that the company just the earnings you have nowhere to go but up? Is that kind of like the bullish thesis or what's going on here?
It is, but a lot of these are still growth companies. They may not be making money, but in reality, in the last 10, 15 years, tech companies for the majority of the time, the hot ones never make money.
Right. You didn't want to show revenue, because once you showed revenue, you weren't, then you had to just change. Yeah. Right, exactly. So
all right, well, a lot of these are still considered growth companies. I mean, if you look at a lot of these cloud stocks and security stocks and stuff like Crowd, Crowd announced 100% revenue growth, right? And the stock got hammered in its last earnings season. So it'll be those kind of names, as the market conditions change, and then the credit markets also soften in terms of the interest rates and stuff like that, then those things will come in flavor. There'll be a whole host of new companies that are showing 100% earnings growth, 100% sales growth, all the buzz lines that people like to hear. And when they're beaten down and they have really big bases, then you just don't have the levels of supply overhead to knock them down. The buyers and sellers have been at equilibrium for so long, and you just don't have much supply on top.
Got it. Well, yeah, I mean, I appreciate what you're saying, because most people come on the show and they say, yeah, we're starting to get more bullish, but we're being really selective with our picks, and we're buying these value stocks and these safer names in this environment. You're coming on, you're saying you're willing to take the risk buying some of these beaten down growth tech stocks. But again, Kunal, thank you for hopping on the show today. We got to get you back on. Maybe we'll make it like a weekly appearance type thing.
I'd love it.
All right, let's do it. Enjoy the rest of your Tuesday. Let's talk soon.
Take care, brother.
You too. All righty, y'all. We got to keep it ticking. I see our next guest hanging out backstage. My man, Matt Schultz from Lending Tree. We're going to be talking about credit card spending in the U.S. What's going on? I'm sure you guys haven't seen some of those headlines saying credit, Americans are carrying the most credit debt ever and stuff like this. We're going to talk to Matt, see what's going on, see what trends he's watching. So without further ado, if I get a thumbs up or something from Matt that he's ready to go, we'll go ahead and give him our Zinger Nation welcome. There we go, and bring Matt on the show. Mr. Matt Schultz with Lending Tree. How are you?
I'm doing well. How are you doing?
Pretty good. Where are you joining us from today?
Rainy Austin, Texas.
Rainy Austin, Texas. Wow. Well,
two words that don't go together all that often, but today is one of those days.
Yeah. I mean, wow. It's beautiful and sunny here in downtown Detroit. I don't know if there's a lot of people that, would be moving from Austin to Detroit, but maybe if those weather patterns continue, they will be. So Matt, before we get started, you want to give a brief introduction kind of to maybe yourself, what you do at Lending Tree, and then maybe what Lending Tree is.
Yeah, Lending Tree is an online marketplace for all types of loans, whether you're looking for mortgages, personal loans, credit cards, really anything around personal finance. We have offers and lots of information about how to manage those things correctly. And My title there is Chief Credit Analyst, and really what I do is my job is to be up on trends as it relates to consumer debt and credit and that sort of thing, and do interviews and write pieces and create reports that help people kind of make sense of what's going on and make smart decisions about getting credit and using it.
Well, perfect. You sound like the right guy I want to be talking to right now, because I want to have a sense of what's going on when it comes to just more the general credit and debt environment right now. I mean, do you know what I'm talking about when I'm saying I keep seeing these headlines that are talking about the historic, rate that Americans are carrying credit card debt and all this stuff. And I want to know, like, are some of those headlines a little bit, like fear mongering, sensationalized, or is this like a real serious problem we need to be worried about right now?
Well, when it comes to credit card interest rates, there's no exaggeration going on. They are as high as we've seen them since tracking has really begun. Right now, the Fed puts out once a quarter an average interest rate for all credit card accounts, but also one for all accounts that are accruing interest. And those are the ones that really matter, because the people who are carrying a balance are the ones who are accruing an interest and who are really getting hurt by these high interest rates. And the latest quarterly data from the Fed showed that the average interest rate that someone is paying on a card that is accruing interest is over 20%. And that's the highest it's been since they started tracking back in the early 90s. So the all of the headlines you're seeing about those high interest rates, they're very real, and it's not just on new credit card offers. It's on cards that people are actually carrying balances on.
Got it. So you kind of have two things happening at once, the way I understand it. So throughout kind of the early stages of the pandemic, when, actually people were able to start paying off, like people's credit started going down, people were paying off more of their credit, and now you're starting to see the amount that they're carrying on their credit card increase, and also, like you're saying, that interest rate increase, so kind of being hit with like a double whammy there.
Yeah, it was really interesting. During the pandemic, we really did see credit card debt decrease. And honestly, the Fed's been tracking credit card data since the 60s. And really the only time that credit card debt has fallen in a meaningful, significant way is in times of economic catastrophe, like the beginning of the pandemic and like the Great Recession in 08 and 09. And other than that, credit card debt just tends to rise. So what we're seeing now, where we're just shy of all-time record levels of credit card debt, what we're seeing now is just kind of a return to the normal state of things. Americans always have credit card debt, and it tends to rise. And unfortunately, even though we are at near record levels, there's no question that sooner rather than later, we're going to blow past those record numbers.
Got it. And that's kind of happening. Of course, there's another debt conversation going on right now, more with the national debt and hitting that debt ceiling. But what can, obviously there's nothing that we everyday Americans can do about that right now, but what can we do about our own, debt situations and own credit cards? I mean, you mentioned that this is not as consumer friendly of an environment for, not just people looking for new credit cards, but everyone that already has a credit card right now. What should people be doing? And how does that differ from maybe like what they should have been doing a year and a half ago when rates were much lower?
Well, it's still a super competitive marketplace. And if you have decent credit card issuers are definitely willing to lend. You can still do a lot of stuff out there. But if you are somebody who's struggling with credit card debt and you're really battling these sky high interest rates, one of the best things that you can do is to get a 0% balance transfer credit card. These cards, which are widely available if you have good credit, will typically let you go a year or longer, sometimes up to 21 months, without accruing any interest on that balance. And as anyone can tell you who's had credit card debt, that accrual of interest is a really big deal. And being able to go more than a year without accruing any of that interest can really be a godsend if you have credit card debt. There's stuff to know, like there is typically a one-time fee that you have to pay when you transfer that balance. There are some deadlines and other things in the fine print that you need to know about those cards. But by and large, they are a really, really good deal. And there's something that people with credit card debt should absolutely consider.
Matthew, I love that you're saying this right now, because about like literally a week and a half ago, I did a balance transfer from, I basically have two credit cards, one with my bank, Bank of America, and I was just on my banking app, and they had like a balance transfer thing. I didn't even know what it was, but I started reading it, and it was like transfer, X amount of money from a different credit card, pay 0% till this date. I was just like, this is a no-brainer. So then I did it, and then I started asking people. I was like, yeah, I just did this. Was that like a good idea? They're like, yeah, it's fine. I did it without even really knowing. And so now that I'm hearing that you're saying that's actually like a good thing to do, that gives me a little bit more peace at mind that I did that. But again, like when I was reading it, it sounded like a no-brainer. The one thing, like you said, I did pay, I think like a 2% one-time fee, but still, I mean, I transferred thousands of dollars worth of debt that now I don't have to touch for like years, and I paid like $150 or something for that. So
yeah, and it's interesting because it is one of those things that when you hear about it, almost does seem like too good to be true. And we are kind of programmed to be really cynical about that sort of thing. And one of the things that we've seen in surveys at LendingTree over the years is that there is kind of a misunderstanding of how the cards work. And a lot of people think that when you transfer that balance, if you don't pay that balance off in full during that 0% period, you're going to get hit with a retroactive bill for all the interest that you would have accrued during that time. And that sort of thing happens with special financing deals that you'd see at retailers and that sort of thing. But it's not how balance transfer credit cards work generally. The only interest that you're going to pay on that transferred balance is what you are charged once that 0% period is over. So it really is a good deal.
Yeah, it's almost like they're betting that you aren't going to be able to get that full balance paid off by the time it ends. So you really need to make sure that you do. But yeah, like I said, like I did that. So one thing, I don't know how well you know how these things work from like for the actual consumer side, but the one thing I was kind of confused about is now that balance transfer is showing up on my Bank of America credit statement, but it doesn't really separate. Like it doesn't say, here's your statement you need to pay off, and here's the balance transfer. It's basically just all lumped in, and it's showing me like that as my balance. So now I don't know, typically, or like exactly how much I have to pay or how much of that balance is from the balance transfer that's locked into that 0%, if that makes sense.
Yes. Yeah. I'm not 100% sure exactly how that all plays out in terms of kind of what percent of what you pay goes to the balance transfer and that sort of thing. But ultimately, what the best thing for you to do is with that balance transfer card, if you get a new one, is to just put that transferred balance on the card and not spend on it anymore, because chances are the reason why you wanted to transfer that balance is that you're struggling with debt anyway. So the last thing you want to do is add more on.
Got it. Yeah, that makes a lot of sense. So you would kind of recommend, I guess, like using that balance transfer card, like specifically for the balance transfer, and not then racking up like a balance on top of that, which is effectively what I've done, unfortunately. But nothing like I don't want anyone to think like hearing me talk like I have some like crazy credit problem. I just was like Matt said, taking advantage of a good offer, like, and especially in today's environment with money and how much rates, like our rates are, getting a 0% basically loan for like 20 months is, again, like you said, just sounded too good to be true.
Yeah, it really is a good deal. And it really is about focusing on knocking down that debt, because it's the old saying, if you find yourself in a hole and you want to get out, the first thing you do is stop digging. And if you transfer that balance and you get it down to 0% and you keep spending, then you've still helped yourself, because you're not paying as much interest, but you're still adding on to that debt, and that's not an ideal situation.
Got it. Well, this has been very helpful. I'm gonna, see if we've got any questions flying in the chat. But Matt, are there any topics, that have been top of mind for you in the credit and debt space that we have not gotten to today?
Well, one other thing that people can do that they might not know about as it relates to interest rates is that you can just call your credit card issuer and ask them to lower your rate. We did a study early last year where we found that about 70% of folks who ask for a lower interest rate on their credit card get one, but way too few people ever ask. And I've done that survey a couple times at LendingTree and at a previous company over the years, and the numbers have been that high. Those success rates have been fairly steady over the years, and it's just something that people don't recognize. And it's something that if you go to your card issuer with some ammunition in the form of an offer that you might have gotten in your snail mail, in an email, or that you might have found at a site like LendingTree, and said, hey, I've had your card for many years. I've been a good customer. I spend on it regularly, but my APR is 24%, and I've just found an offer that takes me down to 17 or 20 or 19. Can you match it? There's a good chance that they'll at least work with you some, because the last thing they're going to want to do is lose a profitable customer over a couple of percentage points on an interest rate. So it's worth considering.
Yeah. All right. Well, there you go. There's your last tip from Matt Schultz on the day. Get your Karen on and ask to speak to a manager and ask for that lower interest rate. But I mean, 100%. And it probably doesn't just go specifically with banks and credit cards. There's probably a lot of, like you said, typically companies aren't going to want to lose a recurring customer that's giving them money over time, just like for a little bit deal now. So there's a lot of times you can probably find some deals there. But Matt, thanks for hopping on the show today. I think you definitely helped me have a better understanding of what's going on with the credit and debt situation in the country, and more specifically what we can do as everyday people to kind of help ourselves out right now in a tougher environment than we found ourselves in really at any point in the last, obviously when COVID hit was really scary, but then we had some good stimulus checks and whatnot. So this is really a tougher environment for a lot of people that we've had since 08, 09. So yeah, Matt, I'd love to have you on the show again.
Absolutely. This was fun. Thank you.
Oh, awesome. All right. Well, Matt, enjoy the rest of your Tuesday. We'll chat soon.
Sounds good.
All right, y'all. That was Matt Schultz, the Chief Credit Analyst at LendingTree. Go ahead and smash the like for Matt. I see you guys. The Patrick Whelan gang that came in the chat hanging out. Patrick will be joining us in about 25 minutes, 12:30 p.m. Eastern time. I also see our next guest hanging out, Jay Trader. So if I get a thumbs up or something from Jay Trader that he's ready to go, we'll give him our special Benzinga welcome. Bring him on the show. See what Jay Trader's been watching. All right, I believe we are ready to go. So without further ado, go ahead and bring Jay Trader on the show. Mr. Jay Trader, how's it going?
Hi, Brian. Going good over here. Pretty volatile market today. Over here from somewhere in Italy.
I think.
Right?
Detroit. I think this is a year. We've chatted before, but it's been about probably a year now. So I want to. It's good to catch up. I appreciate you coming on. I know it's a time zone change for you. So what's been going on since the last time we've talked? There's been a huge market development. Bear market. It's been starting to come back a little bit. How you been feeling? What have you been trading?
Mainly, what I've been trading are small caps, the most volatile stocks of the day. Like, for example, today we're having BXRX, BIF, GNS, also GROM. So a lot of these stocks that, day one, day two tend to fail. Just look right now on BXRX. It's a play that we're short from 635.
Sorry, BCRX?
BXRX.
BSRX?
BXRX.
Got it. Sorry, I'm being slow today.
No problem.
BXRX. Oh, wow.
Yeah, it was the mainly gapper this morning, and this is a small cap that has history of fading. I really like to trade these stocks because they have, when you take them good, a pretty good risk-reward ratio for the strategies that I trade. And I generally tend to trade long on these on the pre-market or after bear trap. Otherwise, the majority of the times I take them short. And we're short this morning around this 635. You see the fake out just the gate after the halt. We waited the halt.
Yeah, so we're looking at a 2-minute chart here. I just wanted to let the audience know where my cursor is right here is right around the open. Here's the open, 9:30. Stock opened at about $6 a share, dipped down to about 5.50, and then jumped up to 7. So how are you trading this? So
we were trading this. First of all, we had a setup long pre-market. I personally missed it, but if you can see around 8:58, 9 o'clock, we had the dip over there. Exactly. And you can see even the 2-minute, we had a small doji and a bounce from there. That was our main daily level, 480. Then the next daily level was 530, 550, and then another one around 657. Once we saw the open, I generally tend to trade these like we had GROM in the past, HDTM, XPON. They generally tend to have a blow up at the gate. And this blow up is a really big bull trap. So we have a lot of retailers. They're trying to long these on the breakout. And the smart money, so basically the big hands, they create an environment for a possible bull trap. And in this case, we had a push. It halted. The push was around 690. I missed the entry around 690, so the top on the halt. I waited, this came all the way down, halted down around 610. And then when it was around 630s, we shorted from there, and I only covered 30%. I'm holding for the target around $4. And all of this was recorded, traded live in my room. So we're actually trading this, one of the usual setup that this market gives. So a lot of, I would say, day one, gap and crap, just like they fade all the way down.
Yeah, and I mean, I've noticed that over the last, I don't know if you've noticed this, Jay Trader, that the past few months or so, it seems like we've seen more of these biotech stocks, these kind of smaller cap stocks. Really, we've seen them be runners, in the pre-market up 30, 40%, and then different days where they'll be up 100% or so. Do you see that as a good sign for the overall market, or maybe that there's just some more speculation and volatility returning?
I mean, the market is great. We had months, if you remember, August, September, there were not so many plays in small cap land, or at least for what usual traders are looking for. They're looking for the gap and then to short all the way down, or they're looking for great runners. The volume, those months were a little bit low in a small cap land. But then since October hit again, we started having an increase of volume trading in the small cap land between November, December, now January. It's like crazy. So we have 4 or 5 plays every single day. I would say by stats. Okay, so I'm big on stats, so I track every single thing every single Saturday when I have my free time. That's why my wife hates me. But basically 72% since September of these stocks on day one, they close red on the day. What does it mean? They close below the open level. So that's a pretty good stat. If you go back for 1 year, we have more than 75% of these stocks with certain parameters, like gap 20%, at least 5 million volume trading, and so on. the day closed red on the day. This BXRX that we're trading right now, this in the past had already 7 gaps days, and each day had traded at least 1 million volume, at least 20% gap, and 7 times on 7, it closed red on the day. So you have an int, okay? So you have an edge by the stats. But if then you look at BIAF, BIAF, which is the main gapper right now, BIAF, this has also the stats that in the last 4 gaps, so we had only 4 gaps in the last 2 years and a half from this stock that, again, were above 20% with 1 million volume. Even this, by stats, every single time closed red on the day. What's the main difference? Today, it simply didn't, I would say, respect the stats. And it was respecting the stats for the first 30 minutes. But when these small caps, they tend to hold the open level by 10 o'clock and even more by 10:30, the pre-market high, they tend to run. So that time is when I finish to collect, my stats for the short side. And if by 10 o'clock is not unwinding as I want like BXRX, then stats get lower. You have not anymore 72% that this will close red on the day. You start having around 50% this close red on the day. So what you use more technicals. Of course, I like to read order flow and my strategy. And in this case, this morning, BIAF was a stock that I had a stop loss on this because I was trading this and I took 10-cent stop. So it's a good stop because I was short. It then faded in the first 30 minutes as I wanted, and I missed that. And then simply gave me a long pattern for my strategy from the low 3s up to now the 4s. And what's the problem over here, Brian? Because everybody, when he sees these extensions, loves to trade them short. Like they want to see right away the $4. We have a daily resistance at 420. Everybody wants to get short on this, but they get short on the front side. They get squeezed. They blow up their accounts. And that's why trading small caps, when you don't know the patterns, when you cannot read the price action structure, it's very hard and tough because, a stock that goes up 100% in 2 hours, 1 hour and a half, in 2 hours can really blow up your account. So never trade the front side of the move. Wait for a backside in the case of BIAF.
Got it. Yeah. I mean, so I'm curious, like, because the first one I haven't looked at BIAF this much, but BXRX looks like it's been on the market for a decent amount. Looks like it's gone through some like reverse splits or something, because the stock used to be all the way up here in like the thousands, and it's down at $4 right now. What do you like? Just like the volatility of these small cap names, or how are you coming up with these names? Are you finding them in screeners, or what's your process there?
So I trade also futures every day and big caps. I mean, Tesla is one of the main stock that I trade. But when I see these small caps, they are pretty easy to trade in the sense that you find your level. First of all, you find on the scanners. So you just look at stocks, bigger gainers, 30% plus on the day. At least you want to see some liquidity. 1 million volume at least, okay? At least. I don't want to trade anything that is illiquid because it will be manipulation, and you don't have you don't want to trade spread, okay, with spread. And then I start looking at those stocks that have a tendency to fade, okay? If I see the XRX, all the previous gaps just faded on day one. And then I start looking at my levels, and I start looking at the pattern and how the tape reacts at those precise levels. This morning, when BXRX came to 690, it gave really a fake breakout of that resistance, which the resistance was around 660s, and then it started to fail down. And over here, really, we see that the bull trap that is very, I would say, reliable in this small cap land, and simply unwind it. This and so many, I can tell at least 10 tickers in the last 15 days since the starting of the month, actually a little bit more. So it's one pattern that really repeats. Of course, we have like stocks like GNS. This is naked short selling investigation. Remember, GNS is one that is trapping since 3 days already, short sellers, and I would say is trapping both sides. This morning, a trader was asking me, Jay, is this backside? No, it's not the backside. One of the easiest approach to understand if it's backside or not, besides looking at the tape, how it reacts, on a 5-minute chart, and even better on a 15-minute chart for these multi-day plays, I simply put a 200 exponential moving average. It's not that alone that makes the backside, but if we can see over here, the 200 on a 5-minute chart, the last 3 days, every single dip was bought in. So that's, on part of the strategy tells me, okay, we're still like on the front side of the move. And there's still more to understand that. But that's not for me a great short right now until I don't have the backside. And this morning I got that at the lows of the day. You can see that bear trap over there, just that wick that you can see on your 10-minute chart at 9:30s. I got long exactly around 9:42. And then I drove this from 450 and I sold into the 530s. Yeah, I got that.
Wow.
Move. That, and I will share tonight on social as well. So that move is, again, a bear trap and a curl. I call it bear trap J-line curl because it's a pattern that I really love to trade, and I've been trading like the last years very, very often, especially in these high manipulated stocks.
Yeah, I mean, I see that one move right here after the open on GNS. I mean, this is a 10-minute candle, and it went up, 16% in 10 minutes. So it's a great move there. And yeah, I mean, like you said, the market's been grabbing for volatility, for all these things. It's been great. And I like seeing some of these runners because, like I said earlier, it's kind of a sign to me that there's some speculation returning. Do you expect like bio as a sector, like the XBI has been trading higher, of course, was a huge laggard throughout the past year or so. Do you think biotech's going to remain kind of a hot sector?
I believe this. So every single time that the market went from a microstructure bearish to bullish, and I'm looking, for example, in the last weeks, a lot of SPY, yes. So we're trying to change the structure, at least in the short term, from lower lows, lower highs to higher lows, higher high. The more bullish the market will become, the more small cap plays we'll have around. And that will bring much more liquidity. Much more liquidity means also more volatility. So both parts, shorts, bulls and bears, and that will be very good for the biotech companies. Of course, we have all, like this epidemic, China and everything. So biotech companies will always be, I would say, one of the best sectors to trade, at least for small cap traders. So for me, 2023, if we're going to continue like this, we're going to be crazy, really. A big flow of volatility on liquid will come.
Yeah, and I mean, I like to look at what sectors kind of like lag and underperform and then bet that there will be some sort of reversion to the mean. Like if XBI is down, for 2 years against the SPY, like eventually I'll bet that it comes up and starts outperforming to kind of, eventually, like I said, revert to that mean. And then, so Jay Trader, you mentioned Tesla. Any other big cap? I mean, Tesla's getting ready to report tomorrow. We've got Microsoft today. Any big companies you're watching into earnings?
Well, all of these. The main ones that I trade are basically 5: Tesla, Amazon, Meta, Google. Also trade Apple pretty often. And then these are the main ones. So if you look at Tesla, for example, this is the most volatile stock that we have in the big cap land. It's very liquid. I mean, it can move like 10% in one day. I simply love to trade it. The last 2 days, besides this morning, the last 2 days, we had the same pattern that you saw just now on GNS. So a bear trap at the gate, an under over essentially, and it pushed to the upside. Looking at this today is an inside range. Okay, so we have Tesla over here that is just like stopped below that 145.50, and it's just holding over here a pivot point at 141. So we are in a range for the last now 5-6 hours since this pre-market. What I'm looking over here today is just waiting calmly, not really over trading. I took a long this morning on Tesla from the lows, and I didn't take anything else, one trade only. I will share this as well. And what I'm looking is, or that 145.50 breakout bear bull trap. So really a buy stop over there, trapping everybody and all the unwind. So really looking to trade a counter trend over here. Or I'll be looking for the 141, 140.50 dip, maybe a fake breakdown, bear trap. So a sell stop and then push the upside. The trend over here is already formed. The dip was around 125, 126, and that was a main point of control of the volume profile on the weekly chart. And we bounced just like last Thursday. If you can go there, 124.50 last Thursday.
Let's see. Last Thursday was
124.50. Maybe you can see better on an hourly chart.
Okay, let's go to hourly.
That's my way to go, Brian. That hourly chart. Thursday, okay. 124.50.
124, was that the 7th? No, that was been the 19th. Okay. So 124. Oh yeah, right here. 124.
On the 19th, exactly. If you go back, you will see that the previous Thursday and Wednesday, we had tops over there. So if you drag the line, exactly, that is my level. So once it was not to reject anymore that level, but we dipped on Thursday, exactly there. Then we had a confluence of many signals. We had the volume profile point of control. We had that resistance now becoming support. We had a major pivot point as well. And then we had all this confluence of signals. That is when we started like to long this. Then we longed that yesterday and the day before, every single time to open. Same exact setup of GNS. So like setups repeat, small caps and big caps. So we see that
so you like to see that previous support become resistance on the downside, right? If you have the level that was hit multiple times, and then now the stock's moving down to those levels that it's already hit multiple times, you're willing to take a bet essentially that it's going to bounce off those levels.
Exactly. Because the point is, you're buying a breakout, and in this market, bearish market we had till now, if you buy a breakout like 7 times out of 10, you'll get stopped. I mean, the big hands use this manipulation just to trap you. If you instead wait that it confirmed the breakout and you wait for or a small tight consolidation or a retest of that breakout level, resistance becoming now support, then you have a better chance to enter with a tight risk for a better risk-reward ratio. And all of this is, I would say, the way to go in a bearish market. Of course, 2020, 2021, you buy me a breakout on Tesla, every single time, almost every single time it worked, but not in this market. That's the reason why swing traders are not having a good time. That's why I'm a day trader. So I just love to trade the intraday, few hours, and then just like I can do my things and mentor my traders.
There you go. Yeah, that's why J traders getting in and out of those trades, daily, quick trades. Not like you're saying, not the best market for swing trading, because it seems like every day the market's taking one swing one way, one swing the next way, and so I don't know. I mean, like you said, I've been kind of more in and out of my trades quickly, just taking some profits here and there, but. Always a pleasure to get you on the show, man. Anything else you'd like to touch on that we haven't got to today?
I think we covered the major things, and just like as I said before, form a strategy, back test it, look how it works. Remember that on strategy is not enough when you trade day trading, because there are many different structure scenarios. So a bear market, bull market, sideways market, biotech companies will move very different from wheat companies and so on. So you have to backtest your strategy for that current market, for that scenario. Because if I would trade the same setup only for 12 months, I wouldn't be profitable. There are certain setups that work more for certain months, others for other months. So you have to know what to trade and how to play it. That's the main point if you want to be successful in trading.
Got it. Well, Jay Trader, thanks again for hopping on Benzinga Live with us today. We got to get you on again soon. You're joining us from Italy, right?
Yes, San Marino Republic. Small republic, buddy.
Where again?
Republic of San Marino. It's like midway from Rome and Venice. We are over here at GMT +1, so I believe 6 hours from you. And we're independent republic, just like the Vatican.
Oh, awesome. Well, I've got some Italian family on my mom's side, I think from the Campania region or something. I don't know, but I've
Campania,
never
yeah, beautiful place.
Campania.
Where there's Naples.
Huh? What'd you say?
Campania, where there's Naples, Positano, very nice place.
Okay, well, I've never had a chance to come over there and visit, so I'll let you know when I do. Maybe I'll be able to come check out where you're at too.
Of course, dinner together.
All right, awesome. Well, Jay Trader, enjoy the rest of your day. I'll reach out offline to get you back on again soon. Okay.
Thank you.
Of course. All right, guys, smash the like for Jay Trader joining us all the way from Italy in the afternoon, the evening for him. Thank you again. Enjoy the rest of your Tuesday. All righty, y'all. We're going to keep it ticking. I know a lot of y'all in the chat here for Patrick. He's going to be joining us here in about 3 minutes or so. Actually, just saw him pop up backstage. So all y'all that are here to see my man Patrick, do not go anywhere. He'll be coming on any minute now. Before we bring Patrick on, let's just do a quick rundown of what's going on in the overall markets. Let's get the S&P 500 pulled up. We are red, still red, down about 0.1%. Let's take a look on the 5-minute chart here. You can see we kind of were coming up toward those high of days, toward and kind of rejected there. So I don't know. I mean, we'll see if we get a little more bullish activity this afternoon, but kind of just been a boring trading day so far. Live Nation Entertainment. I mentioned one of the big headlines I've been seeing today. The Ticketmaster Live Nation court case started today regarding the Taylor Swift tickets. Stock is actually up 2%. So I don't know. For whatever reason, court cases, legal battles, like tend to not really hit. I mean, there's obviously certain cases where that's not true. One that comes to mind is with like the opioid cases, hit a lot of the biotech and healthcare stocks involved. But a lot of times, like you'll see companies settle or they'll have a congressional hearing or a legal battle, and the stocks, like it might be one of those buy the rumor, sell the news. Like when the actual news is happening, people are expecting this stock to get hammered, and it's not. But that will just be an interesting story to watch, see how it develops. Doing another quick check on just what's going on. The Dow up about 0.06%, so all relatively pretty flat. Nasdaq slightly in the red. XLE Energy in the red today. XLF Financial slightly in the green. So pretty boring day. But alrighty, guys, it is about 12:30, so I don't want to keep you guys waiting any longer than you already have been. I know you guys have been real patient in the chat. I see Patrick hanging out backstage. So without further ado, if I get a thumbs up or something from Patrick that he's ready to go, we'll go ahead and give him our very special Zinger Nation welcome. Bring Patrick on Benzinga Live for the first time. Without further ado, let's go ahead and roll that intro and get Patrick on the show. Patrick Weiland, how's it going? Welcome to Benzinga Live. Happy Tuesday. How are you doing today?
Doing good. The market's chopping around, so it's one of those days, but it's part of it.
Yeah, well, all right. So before we get going, Patrick, I mean, why don't you just give yourself a brief introduction? I know most people in the chat and the audience are familiar with you. I know a lot are actually coming from your channel, from watching you. But for those that are in our audience that might not be familiar, who are you? You know, what's your channel? What do you do?
So my name is Patrick Whelan, and I have a YouTube channel. I've been trading stocks, ETFs, futures, crypto, everything, options. I've done that for like 6 years now. And then in the last year, I've really just like honed in on futures, trading the ES basically every day. We do a live stream every morning at 9:15 a.m. So it's just every morning calling the market, looking at the market and seeing what's happening. I love futures, and I think that's where the money's to be made during this volatile time.
Yeah, so I'm curious. I want to learn more about kind of what your future strategies are, because it sounds like, you know, you've had your own journey as a trader, and over the past year or so, you've found something that you kind of like to stick to that's been working for you. If you want to, you are able on your end through this streaming service, like share a screen, because I don't have futures data, unfortunately, on available right now on my end. But if you don't want to share your screen, that's fine. I can just pull up like the SPY on my end, and we can look at that.
Screen share. I have one. I have vertical monitors. So it always makes the screen share a little funky. I don't know. We'll see. Does that work? Can you
Yeah,
see
yeah, it looks fine actually.
that chart? Yeah,
Oh,
perfect. All
actually,
right. Kind of.
oh,
Well,
maybe
yeah, it's kind of
can you try
funky.
to do it by like specific window or tab so it's
Oh
just the
yeah, let me
charts
see
and
if
we're not
that.
getting double?
Yeah.
If not, like I said, we can do the screen sharing on my end, no issue.
Okay, yeah, I can go by
Um,
the window. Perfect. There we go. Now it should be good.
Coolio, perfect, yeah.
Yeah, so I
All right,
mean
so yeah,
this morning you can yeah.
oh, go ahead.
Yeah, so this morning basically, we had the big kind of question always is, are we going to be in a choppy day? Are we going to be in a trending day? I mean, I was really surprised on Monday that we had the move that we had. I think a lot of that was just everyone was so bearish. I think there's a great way to think about the market. The market's going to do the opposite of what the majority thinks it's going to do. If everybody's bearish, then we're going to go higher. So we had that huge move on Monday, just massive move here, rallying up in the ES, the SPY, and we just broke the upside, got that break over the 4,000 up there to the 60s. So, and then actually a nice little move there end of day. But today you can see the difference in the price action. We're getting tighter and tighter here at the 30s. I talked about it earlier on the stream. Like really right now, we're just in a battle zone, pretty much anywhere between, this 4,000 level and 40s. We're just kind of in that chop kind of area, testing that low of yesterday from that kind of end of day low there at the 16s. So, my strategy really is a simple idea of just trading the trend, trading momentum, trading the overall moves in the market, not trying to predict which way we're going to go up or down, but really just trying to focus on breakouts, momentum. Like this trade right here yesterday at 9:45, getting that breakout over the 4,000s. I mean, we had, I think, 40 points on that move alone. And look at this 15-minute candles. I mean, it was literally green, 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 green. You could have bought at 4,000 and closed your eyes and sold at 40 yesterday. It was that easy. So I love when those types of setups present themselves. And the futures market, the liquidity, the action, it's all there. And I love the idea. Like literally every day I just trade the ES. I don't really do anything else. I just trade the ES every day.
Hell yeah. Well, I'm gonna have to start watching you in the mornings as I'm getting my content ready together for the day because I think looking at the futures is a great way to kind of prep yourself for the market for the day. Also seeing a comment here, Patrick. Someone said he really did do his hair for Benzinga. I appreciate that, but it's not that serious. You didn't have to do all that. Next time we have you on the show, we're a laid back, fun show. If you want to come in your jammies,
I'll put on the suit next time and get it going.
All right, well, tell me if you'll do that, because then I'll have to match you. Otherwise, you're gonna make me look like a scrub on my own show. All right, but Patrick, I want to get away from futures for just one moment, if we can, and talk about some kind of individual names as we head into earnings season. Are you planning on trading any of these names in earnings? We have Microsoft this afternoon.
Yeah,
We've got Tesla. Yeah, Microsoft coming up this afternoon.
Yeah, to be honest, I'm not a huge I try not to gamble. I feel like trading earnings has always been a gamble. I've learned my lesson. I've done the research and had the whole plan figured out, and then you end up getting options or you end up buying the stock into the earnings report, and then it just does the exact opposite of what you thought would happen. So I mean, I think overall, like my plan, I think the market for the year is going to be a green year. I think that the market's just been so beaten down these last few months. Everybody's still bearish. You've got a lot of things going on with the debt ceiling, with the looming, all these questions. But really, what would be the scenario, I think, is that we go into a recession, then the Fed slows down, and then you get the government doing some type of stimulus, trying to get people out spending money. The market rallies. We get this crazy, just stupid bear market rally, and then we end up finding that inflation goes back up, and we're in trouble again. So there's obviously a lot riding on.
Yeah, I mean, you mentioned the debt ceiling looming, potential crisis. There's a lot of things going on that I think people have been worried about, big recession coming, all this. But I've been remaining pretty, more bullish than I think the average retail investor has been over the past, year or so, just because it seems like a lot of the things that people are worried about haven't really been as bad or have started to kind of alleviate as time goes on. So yeah, I mean, for the earnings themselves, I'm curious, Patrick, I'm going to be looking at how the market reacts to some of these earnings reports that I don't anticipate being great. But like you said, like everything's already been so beaten down. I think the expectation, the bar's sort of been lowered, so that even if Microsoft comes in today and says like, yeah, last quarter wasn't great, it might be better than what some people expect anyway. And so I'm going to be curious about like how those stocks are trading after hours and into tomorrow. And
Yeah.
if we start seeing more bullish activity, I'd be shocked to see, like more big players, more bullish flows just coming in.
Yeah, I mean, because if you look at the options right now, a lot of the options are pricing in, not very big moves. So, the problem with earnings is like, unless it's like you said, it's got to be a total surprise. But if it's anywhere within expectations, then there's not really like a move there. The problem now is that a lot of these publicly traded companies, they're doing damage control. They're trying to reduce costs. They're firing people. I mean, Microsoft, what they said, 10,000 people they're letting off. So, I mean, that obviously, what they're trying to do is they're trying to contain losses right now. They're trying to get those, the next quarter, the next earnings, like in the next year or so, they're trying to get those earnings looking better. But what's going to happen is, they're going to start firing people. They're going to start cutting back just to try to maintain. And then we're going to go into the future, where it's going to be more competitive to try to hire back all these people that they fired. And it's going to cause issues in the future with developing new products. And, if you fire all of your engineers just so you can keep selling the same computer for the next 2 years to make money for your earnings, you're going to get to a point where you're like, hey, we got to hire people back.
Yeah, 100%. So, I mean, you're typically looking at things from more of like a trading perspective? I know you're trading the futures and options and whatnot, but do you also do like long-term investing on the side?
Yeah, so it'll depend. I mean, right now, like I said, I've been looking at some longer term options, maybe like even on the SPY. Or I love Nvidia. I think Nvidia from a overall like macro standpoint makes a lot of sense. I mean, their technologies, right where you want to be: computers, VR, AI. I mean, they've got a whole suite of just amazing technology. Do I think they were overvalued? In the last big run up, I think there was obviously just a lot of euphoria, but I think Nvidia at the end of the day is always going to be a strong player in the market. And I mean, they've been holding, they've been moving. So, it'll be interesting when it comes down to tech stocks. You just got to think about like, what's the next catalyst, and Nvidia is right there for the future of it all. So
yeah, Nvidia is one of my favorite.
Nvidia.
NVIDIA is one of my favorite long-term investments, and I hold a lot of shares of it just because, like, I really do think NVIDIA's technology will be, like, in everything in, like, 30 years, whether you're looking at AI, self-driving, obviously gaming, computers, crypto, like basically any technological things that's expected to grow. NVIDIA, like, already has a pretty good foothold in. So it's been one of my long-term. I mean, it's just like you said, it got maybe a little too euphoric, a little too much too quickly in that bull run when we topped out at what was that, 350 in like November, and we're down below $200 still. It's been on a pretty strong ride since we've hit those bottoms at around 100, almost up, almost 100% from those bottoms now on Nvidia.
Yeah.
But yeah, good to see that solid price action there. So I believe it was Jay Rice. We had someone in the comments bring up a good question. Like, do you ever trade the futures after an earnings cycle? So say, like, for example, today, say Microsoft reports a great quarter. Would you ever go out and then buy a bunch of like ES expecting a big move in the futures based off that Microsoft report?
Yeah, I mean, I think it really comes down to I believe that it's not going to be, like you said, I don't think it's going to be a blowout, on a blowout type of setup where it's just like you can see, after hours, we get like a 40, 50 point rally in the ES. I think there's a good setup there, but I'd be surprised if Microsoft really surprises here. I think, that everyone's kind of, like you said, priced in a lot of the issues, and we're at a point where it's just like they're trying to damage control. It's funny because now it's not even a question of like if the ER is going to be like bad. It's more of a question of like, how bad is it going to be? Is it not that bad? So then people are excited. So it's kind of it's a funny situation.
Yeah, exactly. So it's not, and that's where it's just tough. That's why I think I'm not even really like concerned this earnings cycle with what the companies are saying, because what are they going to say? Like, we already know what they're going to say. We already know they're laying off people. We already know they're worried their sales are going to be worse next quarter. We already know they're like worried about a recession. I'm more curious about the market reaction, because if Microsoft says all this and then the stock's up like 2 or 3% tomorrow, I'm going to be thinking, all right, all that shit that Microsoft said, the market had already priced in. People already knew that. And in fact, it wasn't even as bad as some people were pricing in. So now the stock's up. Or vice versa, the stock's down. And I'm like, all right, wow, maybe what they said was worse than what people had anticipated. And maybe we could see that reverberate or see the same signs in other earnings coming, and then just kind of wait till after. So either way, again, I'm pretty like confident that that the earnings themselves from these companies aren't going to be amazing this quarter. So it's going to be just about how the market reacts.
I think you really know that you're like in a bear market when it's a question of like how bad is our earnings going to be, not a question of it's going to be good or not. It's like,
exactly,
are we going to have a bad earnings, or are we going to have just a decent earning? So it's like, when you're in a bull market, everyone's just expecting, big blowouts, big wins. And then it's just like, okay, we'll see how high it's going to go today. But on a day, in this type of world we're living in now, there's so many things that really are changing. Now you have, the interest rates are higher, the debt is harder. These companies are having to really change up their overall strategies, because for the longest time they were basically getting debt with no interest, so they were able to just spend money, do all this crazy stuff, and their earnings, it's also like, it's a game too. They're playing a game with their earnings. It's like, let's move this money here. Let's put this money here. Let's do this financing so that our earnings look better. But really it's like the actual underlying story still stays the same.
Yeah. Well, it's okay. We got Microsoft, Tesla. We touched on Nvidia, some long term. Are there any other like individual names, Patrick, you've been trading recently that you want to talk about, or should we go back to futures?
Honestly, I think there's been some interesting plays in the biotech kind of science world lately. I feel like if you look at the overall, some of the biotechs have just like really kind of held, like you look at XBI, like it's just been kind of holding since like August, September, kind of.
Yeah, for months this thing's been. And biotech was, a huge laggard of the market. The XBI topped out in February 2021. If you remember, the growth didn't really top out till November 2021, and the market itself, SPY, didn't top out till January. So XBI has been a big laggard of the overall market, and a lot of people have been anticipating some sort of bounce there, like have some reversion to the mean. This thing's got to catch back up eventually. And to your point, I've seen a lot more in the past few months, like random small cap biotech stocks like be runners, whether they're up like 100% pre-market or whatever. And I don't know what you make of that, Patrick, if like I see it as a sign of just like there's a little bit more speculation returning to the market. Like maybe some of the fear has subsided to the point where people are willing to now take these like risky bets on random biotech runners that are up, 50% pre-market.
Well, I think it also comes down to like the risk reward, right? Like if you look at the tech stocks, the tech stocks are still like, they're just not that sexy looking. But if you look at some of these companies, like for example, there's a company, NVO. NVO is a biotech company. They actually have a drug. It's like a diabetes drug, but they also figured out that it reduces weight loss. I'm not currently long or short on it, but I've definitely been looking into it research wise. And today alone, it made a big move. But if you look at this thing, like over the last, 6 months or since October of last year, from 100 up to 140 in, pretty much a bear market. So
yeah,
it's interesting. Like you said, you see these little companies that you never really hear about, and you're like, oh, this thing's just been going high. Literally since 2021, April 21, it was at $69. And if you look at the chart, like on the bigger picture, it doesn't really show the bear market.
No, not at all. And you can't really find many stocks like that. There's a few energy stocks. Elf Beauty comes to mind. You can see the dip here from here, but this stock's been super strong. Some other like Ulta, also in the cosmetic space, has remained strong. But yeah, it is like interesting. Like with how bad the market's been the last year, 18 months or so, then you find these stocks like this and you're like, well, hindsight's 2020. Why weren't we just buying these stocks the whole time?
Well, yeah. You look at Kathy Woods. I mean, Kathy Woods was loading up on every tech stock, and then you look at Ulta and you're like, why did she not just buy makeup stocks? Like
right. Like
I mean,
and
Ulta,
well, actually,
literally Ulta was in COVID. It was down to $150. Now it's $500.
yeah, I mean, and that's what I think too. I mean, in today's world, right, when we're all on YouTube and Twitter and whatnot talking about the next stocks, like we want to find the next Apple, the next Amazon, and even if it's not right a straight up tech stock, we're still talking about, Patrick, right? Like the next biotech company that's going to put out the next drug to do this. And that's all great. And it's like sexy to find those names. But at the end of the day, there are opportunities in the market out there like Ulta that are just like, what do? They sell makeup, but they do it really well. And guess what? They sell a lot of makeup and they make a lot of money doing it. And like you don't need to be a company like reinventing the wheel or inventing the next sexy technological advancement. If you're a strong company, like the market's going to reward you.
Yeah, I mean, it's amazing to think about. I mean, like if I would have told you in October of last year, like, oh, I think Ulta's going to be 500, in January, you'd be like, no, it's just like, it's not, like you said, it's not the sexy play. It's not Tesla. It's not NVIDIA. Everyone's like wants to talk about how, NVIDIA is like, oh, it's the future. But like, I mean, Ulta's outperforming NVIDIA like nonstop here.
Yeah. So let's see. We've got about 10 minutes left of the show. I want to see if we've got any stocks or anything from the chat that people want to check out. Let's see, but curious also, Patrick, we can kind of, get off specific trades. I'm curious too, like what have been your biggest like lessons you've learned at like through trading? Like I have a few for me where it's like, oh, I lost like X amount on this trade because I was just like stupid and didn't take profits. And like what have been those like learning moments for you?
I actually talked about this earlier. It's funny because I feel like the trades that I was like had so much conviction on that I thought like, oh, this is gonna be like that one home run trade, that I'm gonna make. Like those trades just like never work out, to be honest. Like it's like when you're too excited about it, like you're like, oh, like this thing's for sure it's gonna happen. Like it's not gonna happen,
Yeah, I don't know. Yeah.
Realistic.
And I feel the same way. I don't know if you like sports bet at all, but I feel the same way with that. Like like the same way with like trades and sports betting. If there's like a trade or a bet that I like love and I'm like all week, like for example, like 2 weeks ago, for the NFL playoffs, I had been like loading up all week. I was like, I don't think the Cowboys are that good. I don't think Dak Prescott's that good. So I was betting on the Bucks like a bunch, and the Bucks just get blown out. And I was like, I was so wrong. And then the next week, the Cowboys lose by a bunch, and Dak looks terrible. And I was like, see, I was right the whole time. I just lost a bunch of money, but I was still right the whole time, And like the trading wise, that's happened to me like a million times too, where I'm like, oh, I'm going to buy puts on this company this quarter because I know they're struggling as a company, whatever. And like, I love the trade, have so much conviction. And then all of a sudden the stock goes up after the earnings. Then like a month later, it's down 20% from like when I bought the puts, but I've already lost all my money. And I'm like, see, I was right about, Tesla going down, but I still lost money on that trade.
Well, that's the great thing about the market is you can be right and still be wrong. You know what I mean? Like you can buy options and they end up expiring in the money, but you could still literally be worthless. Like I've had that happen before. I've literally had puts that expired in the money and I still lost money. Like it was like, how is this possible? And that's the great thing about the market. It doesn't matter if you're, if you're like you said, it doesn't matter if you're right last week, doesn't matter if you're right today. All that matters at the end of the day is your P&L. So, you can make calls. A lot of people love to make calls and make predictions, but I try to just focus on like what's in front of me. I try to not have like a bias and just try to make things happen, because every day, like I said, on Monday, I thought Monday was going to be a choppy, just kind of sideways action day. And it was the exact opposite. And I think that's a lot of retail traders get caught like that. The reason the market makes these big moves is because everyone's like with a bias and then people get squeezed in the shorts. And, that's why some of these massive moves in the tech stocks are happening right now. I mean, NVIDIA was up like 8% yesterday. I think a lot of that is because people are just overly bearish right now.
Yeah, and that's why one of the things when you mentioned kind of like you have like a contrarian outlook where if everyone's bearish, you want to be bullish and vice versa. And it's kind of the same like on a personal level. Like I was talking about, like if any time I have like super high conviction, like I am buying a bunch of Nvidia puts because it's going down right now. Like there are probably a lot of other people thinking that too, and I should probably think about that and like do the opposite. But I have been watching. This is from AAII, the American Association of Individual Investors. So basically just like retail investors like you and I, Patrick, AAII will pull them and say, are you bullish, neutral, or bearish? And as you can see, this is the past 4 weeks. The number's been ticking up the past 3 weeks in the amount of people getting bullish. Oh, and still, I mean, if you look at the numbers, there's still more people that are bearish, still more people that are neutral than bullish. So out of the 3 options, bullish is still the lowest. But as more and more people get bullish, I worry like, okay, now all these people that have been bearish, now they're going to get bullish and buy. And then maybe that's when the next leg lower comes. Like I always think about what the max pain scenario will be for like retail investors. So this is just something that I like to watch on that front, is kind of seeing how people are feeling out there.
Well, yeah, so that's that's on like a weekly idea. I mean, from a trading standpoint, I mean, we're looking at 5-minute candles, 3-minute candles, and really at the end of the day, like we're looking for areas that I'm thinking like, hey, like if we break through this area, we get a breakout, it's going to cause people to have to covering. It's going to, I know, the reason the market's kind of breaking out and doing these big moves is because we're kind of breaking through a level that there's people that have their stops at. So when everyone's sitting there like, oh, this is a key level that's going to go lower. I mean, if you look at the ES right now, you look at the SPY on the daily chart, I mean, we're just sitting right at a major trend line. If we can get above 4,200, it could just be a face ripper of a rally. I mean, over 4,200, I think at that point, the bears could totally get screwed. The market rips back up to 4,800, we get a double top, and then we get the next big move down. So I just don't think it'll be that. I just don't think it'll be as easy as people think, like, oh, we're just not going to grind lower and lower just because everyone's like, oh, we're just going to go lower. And obviously once we get more info this week, got a lot of numbers coming out. We got GDP on Thursday. We've got more numbers on Friday. I mean, I think there's lots of catalysts on the way. And at the end of the day, if all it takes is Jerome, just saying the wrong thing. But I also, it's kind of funny. I guess it's the conspiracy theorist to me, but I would also believe that Jerome's going to get a lot of pressure right now from, the government, from, the Democrats and everybody wanting him to make sure that he's not raising rates. And because really at the end of the day, his job is to raise the rates and get inflation down. But, people look at it like, well, now I can't afford to buy a house, but now the price of food's coming down. So it's like this very hard kind of combination. And all you can really do is you got to be aggressive with those rates right now. And, the government, the Democrats don't want those rates going up because it's going to make everybody, have trouble with money here.
Yeah, I mean, and right now I think it's just like one of those times where a lot of people are more worried than at times in the past. But like you said, I mean, if everyone out there is saying, okay, there's this big recession coming in 2023, I'm going to be short, this big dip is coming, like the more I just don't think that's going to happen. Like, they'll be like, if I see 100 people tweeting about it, I'm like, all right, better go sell my puts because like this ain't going to happen. But I guess there are rare times where, I mean, the things do what everyone's doing. If you think about to when like everyone was buying Dogecoin kept going up. But to your point, Patrick, I do, like you're saying that those sentiment numbers that I pulled up are like lagging on a weekly basis. We may as well just be looking at the price because at the end of the day, the sentiment's going to be determined by the price. If SPY keeps moving higher, the more amount of retail investors are going to be bullish. And the opposite's true too. If SPY is moving lower, more people are going to be bearish. So you may as well just be looking at the price at that point.
Yeah, what's interesting, if you look at that price, if you look at that sentiment and then you look at the weekly candles, I mean, the last 4 weeks we've basically moved higher. So the majority of those people on that sentiment indicator were wrong. I mean, I love in the chat, I'll have 2,000 people on YouTube in the chat just talking about whatever crazy thing, and I asked, I'm like, hey, you think we're going up or down? And I love, seeing how like majority of people will always be wrong. And that's just, I mean, there's a reason that 90% of day traders lose money. It's because, the obvious move in front of you is not the move the market's going to make.
Yeah, I couldn't agree more. All right, well, Patrick, we've only got a few minutes left. I see some people in the chat. They wanted me to ask you about your workouts. Some people wanted me to ask you about your MACD settings. Some people said they wanted to talk about trucks. I don't know. I mean, what do you want to? What do you want?
You can ignore most of them.
Right.
No, but honestly, like for me, I think in the last 2 years, I've really focused on like the health and working out and being active. And as a trader, you're sitting here on a computer screen in a chair all day, so it's a very intensive, mind wise and brain functioning. But it's good to get out there and sweat and get away from computers for sure. And then, yeah, my MACD setting, I tell people all the time, the MACD settings, I keep all my indicators basically set to like the most normal basic setting.
Got it. So just basic MACD settings.
Yeah, because think like if whatever, the whole idea of indicators at the end of the day is that there's a million other people using the same indicator that you are. So when you get a breakout on that indicator, well, then it's everyone else is going to follow that trade and follow that breakout. I mean, that's pretty much why indicators work. It's not because the market just magically bounces off the VWAP. It's because there's people trying to buy there at the VWAP or shorting at the VWAP.
Yep, couldn't agree more. I mean, I think with the indicators, like the basically like, I don't know. I get why some people do, but I feel like the more complicated you get, when you look at some people's charts and they've got 30 different indicators going, I'm like, all right, I don't even know what these lines mean or do anymore. Can we simplify a little bit?
Yeah, I see people. I have friends of mine in real life. I'll go over and look at their computers or whatever, and they like ask, and then they have like I'm like it looks insane. Like there's just so many things on the chart, and it's funny because I'll like ask them like, all right, well, tell me where would you enter, where would you exit? And they're like looking at the chart and they can't even figure out. They're like, well, I would have bought here, I would have done this, and I'm just like, you got too much. So my whole thing, like my strategy is very simple. It's just trading breakouts. I mean, it's like the same thing every day. We're looking for similar setups. We're not, trying to predict what's going to happen. We're just trading the momentum. That's why I love kind of trading futures, trading momentum. When the market's hot, we make money. When the market's not, we just stay out of it.
Hell yeah. Well, Patrick Whelan, you guys can get more of them on YouTube. I'll go ahead and drop that channel in the chat. I'm sure most of you guys are subscribed already, though. It seems like basically everyone that watches stock stuff is subscribed to already, Patrick. But anything else, you want to touch on that we haven't gotten to yet today?
Oh, what do I want to touch on? I think the number one lesson for any new day trader, anyone that's watching this that wants to get into trading, is it's a marathon, not a race. You're always learning. You talk to the best traders in the world, they'll tell you the same thing. I mean, every day it's, you got to show up and you got to put in the work. But if you don't put in the time, you don't put in the effort, you won't get the rewards. Too many people, I would say, most people they start trading, they end up losing money, and they end up quitting after, a couple months. And the best advice that you can have is really just staying alive and seeing it go through.
Yeah, I always like to say you don't lose when you lose when you quit. So just keep going. But Patrick, again, thank you for hopping on the show today. Thank you for everyone that has hopped in the chat coming over from Patrick. Patrick, we got to get you set up in 2023 with your own like Benzinga show, maybe in the afternoons when you're not going on your channel.
We'll get you some, I'm in high demand. Everybody wants me. We'll see. We'll see. Is that snow behind you, or is that just something white?
Yeah, it's sunny today, but we are in Detroit. Where are you based? We're in Detroit.
I'm in Hawaii. Yeah, snow. I'm looking out the windows. I see the ocean and sand and beach, and you're looking at the snow. Yeah,
man. Well, I'll have to come. Maybe the next time we get you on the show, we'll do it from a remote location where you are, because that sounds more fun.
It does.
All right, man. We'll enjoy the rest. Yeah, well, enjoy the rest of your Tuesday. Thanks again for hopping on. Would love to have you back on the show at the very least.
Yeah,
at some point
anytime. Let me know.
All right, man. Well, take care. Thanks again for hopping on today. All right, y'all. That was Patrick Whelan dropping the link in the chat again to his channel if you are not subscribed already. Shout out to all the guests today that hopped on. We had Kunal from Bulls on Wall Street. We had Matt Scholes from Lending Tree. We had Jay Trader joining us from Italy. And then we had Patrick Whelan joining us from Hawaii. So we got all around the world today. Thanks for everyone in the chat that joined us from wherever you guys are. Thank you, Bobby. Thank you, Bleak. Thank you, Dr. Shermanator. Sorry, Mr. Shermanator. He hasn't finished his his MD yet, so he's not quite a doctor. Thank you, Donovan. Thank you, Business Beyond. Thank you, MD. Thank you, Easy Mike. Thank you, The Crow. Thank you, everyone. Smash the like if you have not already. We'll be back tomorrow. Just a day away, 11:30 a.m. Eastern. As always, again, smash the like if you have not already. Stock Market Movers with Money Mitch will be starting up right from here. You do not need to go anywhere. This stream will redirect you automatically. Mitch will be talking to Chris Temple, the editor and publisher of the National Investor, at 1:15 p.m. Eastern. So here in about 10 minutes, do not go anywhere. Mitch will be coming up. The stream will redirect you. Smash the like again and subscribe to the channel if you have not already. Peace and love, y'all. We'll be back tomorrow.
This is Ben